Labor Department saying that the U.S. added 263,000 jobs last month, better than what analysts were expecting. The unemployment rate remained unchanged at 3.7%. So let's talk about what this means for inflation and your money. So, of course, we bring in ABC News business correspondent Alexis Christoforous to break it all down once again. All right, Alexis, let's just talk big picture and what this report actually tells us, truthfully, about the state of the job market right now and the economy.
Well, Kira, this job market seems to defy gravity. I mean, we've got a string of interest rate hikes from the Federal Reserve this year. They haven't really impacted the job market yet. Companies are still out there looking to hire despite all the economic uncertainties and fears of a recession. And this report tells us that the Fed has more work to do when it comes to slowing the economy in its battle against inflation. And something else we continue to see is this mismatch between supply and demand in the labor market. That's because we found out there were 10.3 million job openings in October, slightly down from the previous month, but still high. We've got about 1.7 million open positions for every person looking for a job. So companies continuing to say it's tough to find skilled workers, qualified workers to fill those positions, Kira.
So inflation is still running hot, and everyday items, as we know, from groceries to rent, are costing Americans more and more. So let's just talk about the wages. I mean, are they keeping up with inflation right now?
It's a huge part of the puzzle here for the Federal Reserve when they're looking at whether or not inflation is under control. Wages going up is good news, right, for consumers and Americans. Bad news for the Federal Reserve because higher wages means that it keeps pressure on inflation. So wages were up 0.6% month over month and 5.1% year over year. It sounds good, but it's not keeping up with inflation. We know inflation was up about 8.7% year over year. In terms of what we're spending more on, just about everything. And now the average household is spending about $430 more this month than they were just a year ago for the same basic goods and services.
All right, and the Fed is expected to raise interest rates again later this month. It's going to be the 7th rate hike this year. But earlier this week, Fed Chair Jay Powell, as you reported, seemed to signal that the Fed could slow the pace of interest rate hikes. What do you think? Does that change after today?
Right. Well, Powell made those comments before this report today. This report came in stronger than expected. You have to think the Federal Reserve is going to keep with its aggressive interest rate hikes. That Fed meeting happens next week. We don't expect a 0.75 of a point increase like we have seen the past 4 Fed meetings. We could see an interest rate hike of 0.5%. It seems as though the Fed's job here of trying to get inflation under control and cool the economy has further to go.
All right, we've got to talk about the price of gas. It's actually getting cheaper, believe it or not. And gas prices, I guess, at the lowest level since February, right? So the national average now $3.45 a gallon. Why are they dropping, and how long do you think this can hang on?
Yeah, a little reprieve, right? We deserve it from those high gas prices, and prices are back to where they were before Russia invaded Ukraine. A few reasons for this. Globally, demand is lower right now as everybody sort of hunkers down for a possible recession. Those COVID lockdowns in China means China is not digging in to the oil market the way it normally would be. And a lot of the refineries that were offline because of maintenance are back up online. Let's not get too excited about this drop, though. I mean, some are saying we could see gas fall below $3 a gallon on average before Christmas. Whether or not they stay there is a big question mark, because today Europe came up with a price cap for Russian oil coming to the market. They don't want to buy that oil unless it's below $60 a barrel. No word on whether Russia is going to retaliate. If they do, we could see prices move up. Also next week here, OPEC Plus is going to meet. If those members of that cartel take oil off the market, prices will go up again.
And we will be talking again. Alexis Christoforous, happy Friday. Great to see you.
You too. Thanks.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.